Okay, so today we're going to be doing top to bottom analysis on Micron shares, Micron Technology Incorporated. We'll start an analysis from the weekly, the 1 week time frame. Okay, first of all, let's identify our zones, monthly zones, sorry, weekly. We'll start by identifying our zones, which are essentially higher level support and resistance levels. That's weekly, monthly, daily support and resistance levels. You can just collectively call them zones because support and resistance levels are not actually lines on the chart, they are actually regions. Because it's not strange for you to see price reverse before hitting a support level, like a few points before hitting a support level, or a few points after passing through the support level. So we understand that support and resistance levels are not actually lines on the chart, they are actually zones. A support is not simply a straight line on a chart, but it's a region. It's a region of price. It's a region of price instead. So when we are on the daily or the 4 hour, let's just say when we're on the 4 hour time frame, 1 hour time frame, on the 15-minute time frame, although this remains true that they are zones and not simple lines on the chart, the range of the zone is incredibly small. For example, if let's just say we're on the 15-minute chart right now and we have something like this. Okay, let's not create like this. Let's just say we're on the 15-minute time frame right now and we have something like this. Yeah. So we'll now have a support level here. So you can see, okay, let's put it like this. Okay, so you can see that this second point does not get quite as low as this first point. Let's just say, let's measure it, let's not focus on the moment. So if we're to measure it, let's just say if we're on the 15-minute time frame, this range would only be maybe half a point, half a pip, maybe 1 or 2 pips, 3 pips at most. But if, as we're currently on the weekly time frame, if I measure this distance accounts for, okay, these are shares. This distance accounts for 5-6 points. So if we're to go down to the 4 hour time frame and have a structure exactly like this, the distance would probably be 0.00 something or 0.0 something. But since we're on the weekly time frame, which is a much higher time frame, the difference is as much as 5 points, which is incredibly significant. Which is why we prefer to call the higher time frame support and resistance level zones, just to remain conscious of the fact that these are not individual lines, but these are regions of price. But when we're on the smaller time frames, like the 4 hours or the 1 hour or the 50 minutes, it's no longer relevant to identify such differences because a 1 point, 2 point, 3 point, or even a 5 pip difference, a 5 pip difference is not really such a significant. Sorry. 5 pip difference is not really something significant that you want to watch out for. Your stop loss should be able to cover it. In fact, if your entry, depending on your trade, is late by say 5 points, you will not really count it as a significantly late trade. So that's kind of what I'm talking about. Anyways, we're down on the daily time frame right now, and these are our daily zones. So what is it that makes this a relevant daily zone? For one, even without checking the line chart, I can see price came here, price came down, price came here, price came down. Before price passed up this region. So what does that tell me? That tells me that this region, this top point, is a relevant support, this is a relevant resistance level, and this down point is the lowest point that price has gotten to in a while. So usually this is where I identify our trend origin since we're on the daily time frame. And I think my trend origin should be here actually. Although I don't like drawing my trend origin so far away. This is the trend origin because clearly the trend has been continuing on an uptrend since then. Okay, so now we identify our market structure, which is going to be an impulsive move here, correctional move here, impulsive, correctional, impulsive, correctional, impulsive, correctional, and then we have an impulsive order. So next thing we do is we identify our swing highs and our swing lows. So we have, this is our swing low, or quality, or we can also call it a higher low. So another swing low, another higher low, so another higher low. Here we have another higher low. So now let's identify our swing highs or our higher highs. So here we have a higher high. Let's change the colors of red. The reason why I prefer to use red instead of red to identify my higher highs is because the higher high is the highest point that price got to before a retracement. So in other words, if you can identify the specific, if you could tell ahead of time the specific higher high, the only place for price to go afterwards is downwards. Similarly, if you could identify the higher low, the lowest point that price will get to before it switch to an impulsive move, the only good thing for price to do after getting to that point is to buy. So since price is currently on an impulsive move, that means we're expecting the correctional move next, right? So we'll highlight these points. Let's change this color to blue. We'll highlight here and here, here and here. Then we'll go down to the 4-hour time frame and see if we can spot any patterns that appears before price switches from a impulsive move to a correctional move on the daily time frame. So let's see if we can spot any kind of pattern that appears. Okay, so just off of the top, I can already see something that looks like an N pattern. But let's use the line charts for better clarity. So we can see a very clear N here using the line chart. And we can see it kind of looks like an M, but it's very small, so it's much easier to ignore. So switching back, you can see we have something like an M. You can take either this one or this one, but it's better to take the one that's better formed. So you have an M here. So let's go to the next place. I can already see another M that appeared. See, switching to the line chart, you can now see price went up, price came down, price went up again, and then came down to here, giving us an M pattern. If we switch back to the candlestick chart, it's not very clear, but there's an M pattern there. And then coming here, you can see under M pattern, price comes up, comes down, comes up, and then comes down again. That's another M pattern. Switching back to the line chart. This is our final points. And we can actually see a W pattern. Okay, before we do this, let me ask a question. If you have a pattern like this, do you have an M pattern or a W pattern? Can you pause the video to maybe give you a guess or something? Anyways, based on my own research and my own experience, a pattern like this is actually an M pattern, not a W pattern. You simply have the W pattern inside of the M pattern. Okay, let me put it like this. You have a W pattern. You clearly have a W pattern here. But then, in order for price to get to this point, it means that the W pattern has already done its job. The W pattern has already done its job getting price from this point all the way up to this point. And then price now comes back down here. So that means that this W pattern has already served its job. And the only thing relevant left is that there's an M pattern here. So this is exactly what we have here. It's not quite like it, it's a little bit different because this W pattern this is not even a valid W pattern at all, let's be honest. So we have an M pattern here anyways. I digress a bit, but that's an M pattern. So that means that at the current price movement, we expect price to continue in an uptrend until we see an M pattern. So what does that mean? That means that from wherever price is currently, we can simply buy, put our stop loss below the current price movement, below the relevant zone, and then our target may not actually be this high, but we're in the trade. We're going to stay in the trade until we see an M pattern. When we see an M pattern appear, then we will exit. But until we see an M pattern, until the M pattern appears, the daily impulsive will continue. Until an M pattern appears, the daily impulsive will continue. So that means that we should be buying and looking for how to continue buying until we spot an M pattern on this 4-hour time frame. So that's it for top to bottom analysis on